Good morning, everyone, and welcome back to another episode of Real Estate with Mary. In today's episode, we will be sharing with you a few credit tips that will help you get ready for the home application process. So today, I am so happy to have here my dear friend, Jaime Naranjo, aka Jimmy Orange, from Brightside Services. Let me tell you a little bit about Jaime. Jaime is a passionate businessman. He came to this country from Colombia with nothing. And over the years, with hard work, he started a business and he specializes in strategic marketing. Jaime now has over 24 years of experience in sales development processes, staffing, sales training, and team building. He was awarded the Best Hispanic DirecTV Dealer nationwide in 2011 and is currently a National Account Manager for the Hispanic market at Brightside Services. Also, Jaime went to ICESI University in Colombia and has taken his skills and used them to focus on coaching and educating our community on how to take control of their financial future, especially on how to understand and improve their credit scores and increase their purchasing power. So it is with great pleasure that I introduce to you Jaime Naranjo.
Thank you, Mari. Thank you. It's an honor for me to be here with you guys today. Thank you.
Great. Well, welcome. So we have a few questions here from different clients and people that have sent us questions that we would like to ask you, and if you can share with us on how they can improve their credit. So the first question is from Jessica here in Riverside, and her question is basically, what can someone do to improve their credit scores if they are low? So,
well, when you're starting, thank you for the question. If you're starting your credit, obviously, and you need improvements, the fastest way to improve your FICO score will be having a credit card, but using it correctly. So if you get a credit card, don't spend all the balance available. Try to be at 20% or less. So for example, if you have $1,000 credit card, don't use more than $200 and pay it off following cycle or billing cycle.
So do you mean don't use more than 200 or don't keep a balance over 200? Let's say that you have a credit card with a credit limit of $1,000, but let's say you use 500, but you pay it off the next time, but you don't keep a balance basically more than 200. Is that?
Yeah, basically is that the ideal situation is to be 20% of your credit limit.
Okay.
So if you have $1,000, don't spend more than 200.
Okay.
Or if you spend more than that, pay it off the following billing cycle. So that way you're showing to the credit bureaus that you're a person with self-control.
Okay, great. Well, thank you. All right, let's go to question number 2. Are the online credit websites accurate when they provide your credit scores?
Well, thank you. That's another good question. Most of the time, all the online scores are not real. It's a number that the Experience, TransUnion, or Equifax, or any company like Credit Karma, they have their own scoring system, but it's not the same as the FICO score that you get when you are buying a house. So basically, FICO score is a formula, it's an algorithm. So most of the time, we think that we have 3 FICO score, Experian, TransUnion, and Equifax. But that's not the truth. We have more than 55 FICO scores.
Wow.
So it's basically, the FICO score is a formula or an algorithm that is different on different industries. So you have a FICO score when you're buying a car, which is different than the FICO score that you're getting when you're in the market buying a house.
Wow, very interesting to know. I did not know that we had that many FICO scores. So that's good to know, because a lot of people look at the FICO score that is provided from their credit cards, or even the banks right now provide a score for you, and obviously it's not the same one as when you're buying a house and you have a mortgage company running your credit, right?
That is correct. Different industries have different factors to calculate basically different risk. and they
Okay.
have to see different factors. So
Okay.
your FICO score is never the same in mortgage or cars or insurance
Or even
credit
credit
cards.
cards, yes.
It's totally different.
So you can have, it may be close, but it may be lower or higher. So it's not exactly that one, right?
That is correct.
Okay, well, great. That's good to know. Question number 3. Is the score they see online the same as the mortgage lender will see? So that would be answered by no, it's not,
That
right?
is correct. It's
Okay.
not the same.
Well, great. We have another question here from Norma, and is what score is needed to be approved for a home loan?
Well, it's also different based on the different lenders, but most of the time, 640, 620. But it depends. If you are buying with a higher down payment, then probably it goes 620. But
Okay.
if you're using a down payment assistance, you need at least 640.
At least 640. Okay, well, great. Also, do you have any advice for someone who is just starting to build their credit? What can they do to build their credit or improve their credit?
Well, the first advice is pay your bills on time.
Yes.
And then obviously, installment accounts is like, for example, a car. You're buying a car. This installment account, because as soon as you pay the car off, that account will be closed and is not going to impact your FICO score. But the best way to get a good FICO score is having revolving accounts. So a credit card is very important. So if you want to qualify for a house, you have to have a credit card. Make sure that you're using it correctly. As I told you before, you don't want to use more than 20% of your credit limit.
Okay.
So when you're at that percentage of usage, you're showing that you're a person with the self-control.
Wow, great.
very
Also,
important.
I have a question. What about those credit cards from the bank when you cannot get, let's say, a credit card, a normal credit card? You can get, how are those credit cards called where you use your own money?
Oh, it's a secure card. It's a secure card. But the
Secure card.
secure card, you have to make sure that that company that you're getting that credit card from is a company that will report your activity. Not all
Okay,
of the
so
credit
it's
cards
important.
report. So some of them report only if you don't pay.
Oh,
Some of
good
them
to know.
report quarterly, or some of them report every month. So you want to have a secure card that you are sure that they will report your positive activity in a monthly basis.
Great, so that's good for you. If you have one of those, make sure that you check with your bank that they report every month, because
Yeah.
that will help you, right? With
That is correct. You have to ask your credit card company or the bank. Obviously, those credit cards that you buy at the supermarket, those are prepaid cards. Those are not going to help you to build any credit.
Okay, so no prepaid cards, okay? It would have to be a secure credit card. So, great. I have another question here. Once you make a change or you try to make an improvement on your credit, let's say you paid off an account or you paid off something that was in collection, how long will it take to reflect on your credit?
Well, that's another very tricky question. So you're saying paying off a collection. So if you pay off a collection, your FICO is going down because
Wow.
it goes by the last day of activity. And the punishment is that that negative remark is supposed to stay on your credit report for 7 more years. So that's very important. Now, when you have a positive account, let's say a credit card, and you're paying that credit card off, so normally you will get that impact in your FICO score in a positive way in the next billing cycle, so 1 month.
About a month, yeah.
Sometimes if the credit card reports every other month, then it could be 2 billing cycles.
billing.
Yeah.
So make
60
sure,
days.
yeah, so basically if you're paying a credit card, so an account that you're in good standing, check with your credit card and see if they report every month. If not, it's gonna be probably every 2 months. But it's interesting to know that if you pay off a collection, it affects you negatively. Wow.
the collection is not affecting your credit report because of the amount of money that you own, but it goes by the last day of activity. So when you pay that collection,
Yes.
the punishment is that that negative remark is supposed to be there in your credit report for 7 more years. So that's why when you have a collection that is being so long on your credit report and you pay it off, that will affect your credit
Your
report in a
credit.
negative way.
Oh,
Now,
wow.
the other thing is that then after that you have to take that off your credit report
Okay.
or wait 7 years.
Wow. Also, I've heard that then I would recommend that if you have a collection that you know of, first let your lender run your credit, right? And I've heard that also if you pay that off, you can negotiate with that credit agency or that collection company to remove it from your credit as long as you pay it off. Can you do that? And that way it won't impact you negatively?
Well, most of the time, actually, this is a Federal Trade Commission study shows that the 70% of the negative remarks on people's credit report have mistakes or are erroneous.
Wow.
So sometimes people think that they have some negative reported in their credit report because they took a little bit longer to pay something, but probably that was not reported. So my advice is that before you disqualify yourself, get in contact with your lender or your real estate agent, run your credit, and make sure that we want to see what is on your credit report. I have seen so many times people that think that they don't qualify and ended up having a great credit.
Wow.
Or I have seen people that think that they have some late payments in their credit report and they don't have that reported. So first of all, you don't disqualify yourself.
So run
Go-
your credit first.
Exactly.
By a mortgage professional. And then if there are any issues, that's why you have Jaime, that he can help you with, correcting those issues the right way so you can increase those scores, right?
That is correct.
Perfect, great. So, let's see, I have one question here, very interesting. Is it wise to close a credit card if you do not use it?
Well, that's not a good idea because you're losing your history. So if you pay off the credit card, keep it open.
Right.
So when you keep it open and you're not using it, actually that's a positive thing. You're showing that you are a person with self-control, which is something that I will be repeating over and over and over.
Self-control, correct.
Mhm.
I've heard that word from you many times today. So that is good. So do not close your credit cards that you are not using. You are kind of deleting your credit history by doing that. So don't close it, okay? Even if you don't use it. All right. Well, thank you so much. Thank you.
Thank you for having me.
Yes, and we will be sharing with you all Jaime's contact information from Brightside Credit Services. So you can contact him if you have any questions or if you already know that you have any problems with your credit, he'd be more than happy to help you with that and explain to you how everything works, okay? So his information is going to be down here for you to contact him. If you have any questions, you feel free to contact me as well. So again, it's been great. Thank you for sharing
It's
all
my
the
pleasure.
information. And again, if you like this video, please share, like, or subscribe to our YouTube channel, Real Estate with Mary. Have a wonderful day, and I'll see you again in my next video.
Bye.